Hello, everyone. Let's go ahead and review Wednesday, the 22nd. First thing I want to point out is that the range of the day is starting to get smaller. So the daily range and the average true range, the ATR. So the average of each bar, that range that's getting smaller as well. The average today was more around like 4 points, which is much less than the average bar has been lately. And for me, that's kind of more of the area that I like to be in, more like 4 or 5 points, an average bar, instead of an average bar being like 10 or 15 points. So this is kind of more optimal for me. I'm gonna pull up the daily chart. Notice how over the last couple weeks we've been in a fairly strong bull channel here. I could draw in the channel lines. Either way, you can tell the market it's been fairly straight up, and we can call this a bull trend. And when the market is in a bull trend, then what we like to do is try to find an early low of the day. Think about it logically. If the market's in a bull trend, if we're getting kind of consecutive bull days where the market's going up every day, it's logical to think that the low of that day is going to form early in the day. Like we can look at Tuesday, for example. If the market's going to go up, it would make sense that the low of the day is going to come early, like in the first hour or two, which is what it did yesterday. And on today's chart, Wednesday here, we had the low form early as well. So I don't do too many trades near the open. I kind of like to figure out what the market is doing first and then trade from there. Sometimes I'll consider trades on the open under this context. So we can see the daily chart has been in this bull trend. So if today is going to be up, it would make sense that the low of the day will form early, and you can possibly get a swing trade out of that. So I have this first bull bar here marked as a buy, and so you'd be buying above that bar. What you would have is a double bottom. You can see the market had made a couple attempts to go lower here on the open. First bar, pull back. Then the second and third bar had these big tails in the bottom. So the market was trying to fall down. It was trying to come down to the moving average or yesterday's high to fill this gap, but it wasn't able to. And it wasn't the highest probability bet because we are far from the moving average, and we're not sure what the day is going to be yet. So it's not a high probability trade. But when you're right, the market is going to give you a lot of profit. So the reward is great, much greater than your risk, and it'll offset that lower probability. So I think when you see the market in a bull trend on the daily chart like it has been, right? Prior to today, we had 3 bull bars up. When the market's moving up like that, try to look for an early low of the day and see if you can get a swing trade out of that. Maybe go for, so I have 2 times marked here. So maybe go for more like 4 times your risk, and you'd probably get out up here. And some days will just keep going up and up and up until the close of the day. So when you are trying to swing trade early, that's what you're going for. You're betting that you're going to have a trend that whole day. As the market starts forming these other bars, like bar 4, it's a bull bar. Bar 5, it's a bigger bar closing, above the high here. That's good. I mean, some people will be buying above these. If I'm going to take any buys, I would rather just take either above this first bull bar or above this bar here, and then swing trade. I'd rather not try to be buying above these bars because, like I said, we are getting so far from the moving average. And then if I'm buying up here, let's say I'm buying here above bar 5, then my stop's going to be way down here. So all of a sudden the risk is getting bigger, and the profit's not going to be as much, and my probability isn't all that much better. So I'd rather only be buying, taking like this first buy here and trying to go for 4 or 5 times my risk. As the market is moving up, we start to form a bit of a wedge. And maybe you could call that a wedge there. So this bar 1 is the first push. Then here's the second push, and we get this deep pullback. And then this move up is the third push. So 3 pushes there. You could argue that you could be selling below this bear bar. However, market didn't actually go below it, so the sell would not have triggered. But then here you get this double top. So you have a wedge, double top, possibly an opening reversal. So I like the idea of shorting below this bear bar. A nice, we have this inside bar. It's closing near its low, room to the moving average. So I would try to ride this back to the low, or ride this back to the moving average. And when I did take this trade, that's what I was going for. I was trying to get basically a touch of the moving average or a touch of the open, but had ended up having to, get out around break even on it. Market never touched the moving average, and we form another sort of wedge here. So we'll call this first push, then second and third. And so you have a wedge above the moving average in a bull trend, and we're getting a decently looking bull bar and a good follow through bar. So I think either of these bars are fine to be buying above there. And I think trying to go for a swing trade is appropriate, or I think these are fine for trying to scalp as well. So here clearly would have worked out great going for 2 times your risk, but have been pretty quick and you would have captured the whole move there. But also just buying there and trying to go for, like a straight, like 5 points and just go for a scalp. I think that's fine in that context as well. After 5 bull bars up like this, so we're looking at this close, it's probably going to be more up. Possibly this is a breakout that's going to lead to more up. It's probably not going to immediately reverse. It's probably at least going to go into a trading range first. So what I did was I bought the close here, and my premise was either it's going to continue to go up and we'll be fine, and we'll make money, or it goes sideways to down and I'll be able to get out first before taking a loss. And so it didn't go straight up. I ended up having to just get out break even. You see I have this wedge drawn in here. So we bought the close, and it had 3 pushes up. And on this third push, ended up being this big bear bar. So at that point, I decided, I'd rather not stay in the long. So when this bull bar pulled back here, went ahead and got out break even there. So, I bought here with the confidence that either it's going to continue to go up, or I'll be able to get out break even. The rest of the day kind of hung out in this trading range around this area. So, it kind of makes sense. We had a spike up in the open. Then this was like a second attempt up that didn't get any follow through. And then from there, the bears weren't really strong and the bulls weren't really strong. We stayed in this trading range for a couple hours. So, when there is lots of one-sided movement, like on the open here, and then more, it's what some traders and institutions are doing is they're just buying through here, knowing that, especially backed up by the daily chart, all this buying, saying even if it doesn't go straight up, it'll probably at least go sideways for a bit, and we can have time to decide what to do. And so that's what's kind of going on here. People that are long, they're getting out of their longs, they're deciding they're not going to hold it. Then people that are short, they're not really too confident, and so it creates this trading range. Something that I look for a lot kind of after 2:30 is, are we going to have an end of the day rally or collapse? A lot of the days will either rally into the close, like that last hour or last 20 minutes, or it'll have some sort of collapse like this. Like we see it basically fell down for more than an hour there at the end. And so what's going on this close? And if you watch these daily reviews, this is something I talk about a lot. And you can see here on Tuesday, like on Tuesday, it looked like we were going to possibly have a collapse down, but then we actually ended up rallying and rallying fairly strongly until the close. So what happens on the close? And let's just focus on today's price action. So a lot of the times in the last 30 minutes, that last hour, we will, after trending up for the day, we will have a bit of a collapse into the close. And so why would that happen? Well, a couple reasons. One, it's just logical. Think about it like this. If people are buying all through the day and it's been a bull trend day, well, if they're holding their long positions and they want to get out by the end of the day to take their profits by the end of the day, well, then them selling is going to end up pushing the market down, right? If the market's moving up, that means there have been more buyers through here than sellers. And then those buyers had to take profits at the end of the day. So they end up selling. Now, people can hold the futures overnight, and a lot of people do. And of course, institutions will hold theirs overnight, no problem. Now, if they're not very confident about the market going into the next day, then they probably won't hold it overnight and through the next day. They'll say, we bought down here and we had profits up here, and we're not confident about holding it for another 24 hours and going through the next day. So we're just going to go ahead and sell and take our profits. And when you see that collapse like that at the end of the day, that means the bulls aren't that confident about holding it overnight and through the next day. So looking at the daily chart, where are the bulls starting to get up to? Well, they're starting to get kind of far from the moving average, so that's a concern there. They're also getting up around the FOMC big sell-off. So they're getting up to near the high of that. So, right, we're also in a larger trading range. We've been sideways actually for in a couple of months now. So we're getting higher up in the trading range. We're far from the moving average. We're testing this FOMC high, this large bear bar. So we're coming up into an area of resistance. So all this strong buying is starting to dry up a little bit as we get up closer. And then the bulls were not so eager to hold their longs into the end of the day. And that causes this collapse down. Another reason the market sells off like this is it wants to test the open of the day. So we have the open of the day over here, and market almost got there by 4:15. This is something very common that you'll see, where the open of the day will become a target at the end of the day. And once again, a reason for that is the bulls are not holding it into the next day. They rather just get out of the position by the end of the day. And so the bulls are selling. The bears know that they're doing that, so they're getting short. And then what's the target? Well, the open of the day. Because if they can test the open of the day, that means the day becomes a doji day. It becomes a sideways day, which is less bullish than if it had closed up here and looked like a bull bar. So this is the daily chart, but it's the like the 9:30 to 4:15 hours. Everything else is excluded. So we can see this is how today looked on that daily chart. It's a doji bar with his big tail on top. So not super bullish. We're far from the moving average, but today ended up having this sell-off at the end. So we're far from the moving average, but are not seeing far above average buying. So to me, this signals, the market can still go up, but I think we're probably going to take the foot off the pedal for a couple of days here. And I think that's what this sell-off meant, was we weren't continuing to super eagerly buy into the close like we did on Tuesday. Today, market created more of a doji bar and sold off and tested the open. So I do have a trade here marked, and this is marked based on the idea that we have a chance at collapsing down. So I like the idea of selling below this bear bar. We're bigger picture, we have a high of the day, and then a lower high double top. So this double top is below this high. Now we're getting back below the moving average. We also have this. Look at this 6-bar rally up. That's fairly strong. And as the market starts to sell off here, the bulls that bought through here are getting concerned, and they're going to have to get out. And probably where they're getting out, they're probably getting out below this bigger bear bar, or here where we're getting short. So something to keep an eye out is, are there any trap traders? Where would there be lots of buy orders? Probably lots of buy orders over these 3 bars here. Probably a lot of people got long here, especially considering yesterday's close. Look, once the market dipped below the moving average, then you started to get several bull bars. Then we ended up being 15, 20 points higher than that. So when they're looking at that, they're saying, oh, this is a good chance to buy, and we'll get an end of the day rally up. But that failed, so all these buy orders had to get out, and they exited somewhere down here. And further evidence that that's what they did is we have this big bear bar here. Basically the big, let's see, I think that's actually the biggest bar of the day for the whole range. And that happened because bulls are exiting here. So you have bulls that are getting short because they have to sell out of their longs. And then bears know it, so they're getting short here as well, looking for a test of the open. So everyone's shorting here, which creates this big bar. So when you're studying, one thing you could look at is what are the big bars of the day and what preceded that. And then oftentimes what you'll find is that trap traders were getting out of their positions, which is what caused those large bars. Another example that today my eyes are drawn to is here. I think this is probably the second biggest bar of the day. What preceded this? Well, we had been in a bull trend, and the bears were making attempts to go lower here. They were trying to take control, and they failed. Right, we got this wedge pattern. We stayed above the moving average. Clearly a double top here, and then started to get good bull bars. So the bears that we're selling here, like I was, well, they're having to get out above these bars. And not only is it a good place to get out of your shorts, it's also a good place to get long because of the reasons that I stated. So you have both parties doing something, and the trap traders are driving that market up in one big bar like that. And so that's definitely the types of trades I like to look out for, like buying above here and selling below here, because there's trap traders, and the market can really move quick and give you quick profits from that. So that's definitely some of my favorite kinds of trades there. So looking at tomorrow, once again, this is the 9:30 to 4:15 daily chart. It excludes the overnight hours. We're getting up higher in this range. I think the market will want to test the low of today. So let's say the market opens within this range. I would say pretty confidently it's going to want to try to test the low of the day and go a little bit below it. So because we are starting to get a bit of a wedge pattern, right? We can see it: first push, pull back; second push, pull back; and then third push. Different ways you could draw it in, but wedge pattern there, high up in the range. We're already sort of testing the high of this large bear bar. So bulls will probably want to take it easy in the buying for a bit and wait and see what happens. So if you have the bulls waiting, probably means maybe a couple days sideways to down, so we can see what's going to happen. So that's what I would expect. If we do end up opening within the range, we'll probably want to test down at least to the low of yesterday, and then see what happens from there. And like I said, the range is starting to get back to more of a normal range, like a 50-point range, kind of like it was here and through here. We had this huge FOMC bar that was a 200-point day that threw a lot of volatility into the market here. And actually, I'm surprised because Trump has been inaugurated, and now he's making these executive orders. So actually, I was expecting today to actually be a pretty volatile day because of all the newsworthy events that are happening, but it wasn't. It was actually lower, fairly low volatility. So that kind of surprised me. But like I said, this is the type of market I like to trade. So, I hope that continues. But with that being said, we know Trump is a newsworthy president, right? He will say he moves the market. He will say things that move the market. He does a lot more things that move the market than Biden did. So the next 4 years will be different in terms of surprises to the market than what we've been used to over the last 4 years. So those are my thoughts, and that was our review today. If you have any questions, let me know in the comments. Also, consider joining the Discord, and you can always reach me on there. Just send me a message or ask it in one of the different channels we have on there, and myself or someone else will be happy to help you out there. So thank you guys for watching. I'll see you tomorrow.